Finally, the time has come for this mega cap earnings Q3 2020. Apple and Amazon has released their earnings. Staggering results, amazing, and I want to show you my analysis of what I have found so far for both this company. Welcome back to Family Investment. My name is Alex Ko. So last weekend I spoke about the pre-earnings. I said Apple will miss the expectation. Nope, they actually beat the expectation by a margin. But no surprises because no iPhone sales. iPhone decreased because everybody's waiting for the 5G iPhone 12. So Apple is down 5% or even 7% as low. And if you remember my last video, I said that the buy trigger will be 110. The first buy figure would be 110 and they will be opening 109 tomorrow. Down 5%. Why is it down though? The EPS, the numbers looks okay, not too bad. Expectation were met. 73 to 70 cents. Revenue 64 billion, still great. Expectation 63, so they made a bit almost 1 billion more. Isn't that great? Sale iPhone dropped by 20%. Other product Max blew 28%. iPad blew 46%. Gross margins about 38, so it's still there. So the numbers doesn't look that scary. They actually met the target, the max expectation. They were realistic, but still, at Wall Street are just disappointed, and people are just taking profit away. So the revenue segment, if you look at the quarterly earnings here, the key quarterly earnings, you can see a trend, okay? You can see the 4 spikes. The 4 spikes comes in the fourth quarter. Fourth quarter is basically the end game for Apple. It's always the Christmas sales. It's always the time. That's why they sell their iPhones before Christmas, because that's when they generate the biggest sum of revenue. And the only thing that Apple never did was to show us guidance for quarter 4 this year. They kept it really quiet. So maybe that's why it's pushed the stock price down. They're hoping for a guidance, but no, Steve could never give a guidance. That will shoot up. So I'm hoping for the quarter 4 earnings should hopefully hit 95 billion. And if you change it, convert the chart to yearly, you can see a straight line up. So it's still a growth story. It's not fast. It's still a growth story. They're trying to squeeze in margin. They're trying to squeeze in subscription. They're trying to squeeze in services. They're trying to cycle phones. They're trying to bring in new products. They're trying to bring in more apps. Profit margin, that is key. Profit margin, nobody discussed about profit margin. If you realize that the iPhone are making smaller boxes, they're not giving you plugs for your iPhone charger. Profit margin, they're at 22.8%. Before it was 21%, and the year before it was about 20%. So they're trying to push the profit margin up. They're trying to save every 1% by cutting costs, by not giving you adapters. They're trying to cut costs and stick on the same price. So think about it, for every 1% they can save, that's $500 million in revenue. And if you do the Graham's intrinsic calculation, I work it on 7% growth. That's where we are targeting. And the 3.31 expectation, so I put quite a generous Q4 earnings. I forecast it myself. Apple should come to about $109. So it coincides with this new expected value, $109 per share. So it coincides with my first buy trigger by coincidence, by pure chance. I never tweaked anything, it just came up with a calculator. So that's why my technical analysis on the charting and also Graham's intrinsic, it comes up almost the same value, 109. So that's when the base point that we should be looking. So anything over 120, no, that should be your reward margin. Now let's quickly get into the technical charts here. Let me bring up this technical charts from Yahoo Finance. This is how I plot it. So you can see I've plotted the lines for the buy trigger points, and they will be dropping, okay? For the next 2 weeks, 2 to 3 weeks, I think Apple stocks will be dropping. It will be on the decline. Don't expect any bounce up whatsoever, because we're not going to see figures until next quarter. So it will be dropping the next 2 weeks. So don't jump in and buy. Don't get too excited because of the election, and because we not knowing which president's coming in. We not know whether stimulus check's coming. So it will drop over the next 2 weeks. So look at the technical charts on your RSI. Click RSI. If it goes below 43, okay, and then also on a stochastic, if it goes below 20, and also on your moving day average, it's already below anyway, it's breaking through, and then start looking between the 110, 108, and also the 102 chart. So if all this trigger comes below, then it starts bottoming out, and maybe it's time to start, if you want to buy Apple, it's time to buy Apple shares. So the last few things that I would like to finish off is Apple One. The subscription is out. That will help push the subscription revenue. Hopefully it pushes the subscription and push a couple more £1 billion in with the growth. And the cash in hand, Apple has got 191 billion cash. Rich. It's down 7% because of all the phone cycles and all the things that investing in Apple TV. So that's me on Apple. So if you're asking me, should I buy Apple? What do we do? Just wait over the next course of 2 weeks, 3 weeks, be patient. You start coming down. They might come at 106, 108. They might even come to $100 per share for all, or $99 if anything goes really red. COVID-19, no stimulus check. So be patient. But if you ask me, should I sell Apple? I mean, Q4 earnings, iPhone 12 is not here yet. The sales are not here yet. So, in January, you should see all the Christmas sales. Remember, everybody is stuck from home. We cannot go on holidays. We cannot pay for restaurants. We cannot pay. So I know people might lose their job, but there's inclination, like you've seen in China, people are buying Apple phones. On the other hand, Amazon blew everybody away. Not even that, the sales was so great, the guidance was impressive to me that they're on target for 35% growth. Amazon in 2020 on a 35% growth. We're not talking about Amazon in 2010, we're talking about Amazon in 2020. As it closed today at 3,211, it closed about another 1%. And then it hit my buy trigger at 3,200. That's my first buy trigger for Amazon. And then the second buy trigger is 3,000. So same as Apple, for the next 2 weeks, it's going to be volatile. So be patient. But if you want to get in, I would get in at 3,200 because what I tell you at the end will just shock and blow you away. Disappointing part is no stock split. No stock split is still expensive. To buy one Apple share is going to cost me one arm. The one thing I want you to put in your head and remember is 35%, a magic number. 35% Amazon sales revenue growth for 2020. So the quarter, huge smash. EPS was 7.14 expected. They came in at 12.37. They were hoping for 92 billion, which was already topping from last quarter's 90 billion. They said, I'm going to do 92 billion this time. But they came in 96 billion. Jeez, what is wrong with these people? They can sell stuff. What makes it even better is the guidance. The guidance expected on Wall Street was 112 billion. But Jeff Bezos came out saying we could do between 112 to 121 billion depending on the situation. So they even put a top line 121 billion. So that is really remarkable. So let's get into the valuation quickly just to show what I'm so excited about. You can see my excitement coming through my video. Yes, with the new EPS of 12.37, I assume the next one will still be 12.37. In fact, it should be more, 40. So I'm being really conservative here. Add for the last few quarters and the forecast one, we're getting about 41.35 on the EPS alone. And like I said, the 35% growth. If you plot that on Graham's intrinsic calculator, you should be getting 4,716.80 cents. I'll repeat, 4,760. That's what Amazon should be worth. It should be more than a $2 trillion company. And the way that it's growing and the way that it's just raking in revenue is making more money than Apple, by the way. But hypercharts, you can see on the quarterly one that I've shown you, the revenue growth, you can see a trend. It's been trending like this over the past few years. Q4 spikes, it come back down, it swings up. And the next year, it just swings up. And next year, it just swings up. You can see the swing from quarter to quarter. And this 2020, the swinging even higher. And if you change it to annual, you can see the gradual increase in the line. So it's still a really great growth business. Last year, it was at 20% growth. This year, you'll be at 35% growth for Amazon. And a staggering quarter 2, quarter 3, even better quarter 4 expected. So what are my final thoughts for both Apple and Amazon? Okay, so for Apple, it looks like it's falling. You'll be falling for the next couple of weeks. It's at fair value 109, and that's also my first buy trigger. I think we should be patient. I think you'll fall lower with the election coming up, and also the volatility still there. It looks like on a buy trigger trend, but I think it might go even lower. So if you're patient enough for Apple and you want to hold Apple, perhaps just wait a bit more over the next course of next week and see how it goes. It might drop to a really attractive value, and always buy Apple because Apple's a great growth dividend company. On the other hand, Amazon showcasing their excellent quarter. They're just again going over the top. And Q4 with the Black Friday sales, with the Amazon Prime Day sales and Christmas coming out, all building up to that, I think Amazon will be even better at the 35% magic number growth. And if that's the case, if that's the revenue that's bringing in, Jeff Bezos' company will be a $2 trillion company in no time. Apple, expensive, no stock split, expensive to own, so it's something that we cannot really average down. We have to make a conscious decision if you want to buy one whole stock. So it's something to think about before you lose your arm trying to buy one share of Amazon, to secure for that amazing Q4 earnings that's coming out. It's all the pieces are laid. We just have to be patient. We just have to stomach the volatility. We just have to hold. That's me. I will be holding. And if I do have any more at the sideline, or if I want to risk transfer, I think Amazon looks attractive. Apple, if I want to go for dividend. So this is me. This is my own analysis, my own opinion. I'm not a professional, so hopefully this will help supplement your homework and your research. Okay, so you should leave a comment below. Take care. Bye.